Right now, while most people are distracted by headlines and screen prices, something very quiet but very powerful is happening in China. And if you understand this signal early, it can completely change how you see silver. The Shanghai Silver Premium is flashing a message that very few retail investors are paying attention to. And historically, this kind of signal never appears without consequences. What you are about to hear is not hype, not theory, but a story that the physical silver market has told again and again, just before major moves. Stay with me, because by the end of this video, you will understand why the gap between paper silver and real silver is becoming impossible to ignore. Before we go deeper, if you value calm, smart, no-noise breakdowns of money, metals, and global power shifts, make sure you like this video and subscribe to Wealth Wave right now. It helps the channel grow, and it ensures you don't miss what comes next, especially in times like these when the real signals are hidden beneath the surface. Let's start with something simple. Most people think silver has one price. They look at a chart, see a number, and believe that is the value of silver. But that price you see on a screen is mostly a paper price. It represents contracts, promises, and leverage, not actual metal moving from one hand to another. The real story is always told where physical silver is demanded, delivered, and paid for. One of the most important places to watch this is Shanghai. Shanghai is not just another market. It is where physical demand shows up clearly, without layers of financial engineering hiding the truth. When buyers in Shanghai are willing to pay more than the global paper price, that extra amount is called the Shanghai Premium. And that premium is not about speculation. It is about urgency. It is about availability. It is about real buyers saying, I want silver now, not later. Right now, that premium is sending a strong signal. While paper prices may look calm or even weak, physical buyers in China are paying more. This tells us something critical. It tells us that physical silver is tighter than the paper market wants you to believe. It tells us that the screen price may be underestimating real-world demand. Think about it like this. If silver were truly abundant, if supply were easily available, there would be no reason for buyers in Shanghai to pay extra. Premiums rise when metal is hard to source, when delivery times stretch, or when demand quietly accelerates. And this is not happening in a vacuum. China is one of the largest industrial consumers of silver in the world. Solar panels, electronics, medical equipment, and advanced manufacturing all rely on silver. When China pays up, it matters. Now, let's connect this to history. Every major silver bull move in the past has been preceded by stress in the physical market. Premiums rise first. Inventories tighten quietly. Paper prices lag behind because paper markets can absorb selling through contracts. But physical markets cannot fake supply. At some point, the disconnect becomes too large, and the paper price is forced to catch up. What makes this moment especially interesting is timing. Global mine supply is not growing fast. Many silver mines are actually byproducts of other metals, which means production does not respond quickly to higher silver demand. At the same time, industrial demand is accelerating, especially from energy transition technologies. Solar alone consumes a massive amount of silver, and that demand is not going away. So when you see Shanghai premiums rising, you are seeing the front edge of a much bigger wave. It is not loud. It is not trending on social media. But it is real. And smart money always watches what is real. Another important detail most people miss is psychology. Western markets often focus on short-term price action. China tends to focus on securing supply. When Chinese buyers step in and pay premiums, they are not trading charts. They are locking in metal. That mindset difference matters. It changes how price signals should be interpreted. This is why Wealth Wave focuses on signals like this. Not because they guarantee anything, but because they shift probabilities. They tilt the odds. And in investing, understanding probability shifts early is everything. Now you might be wondering, why hasn't the price exploded yet if this signal is so strong? The answer is simple. Paper markets are very good at delaying reality. Futures, contracts can be created almost endlessly. But physical metal cannot. When enough physical buyers demand delivery instead of settlement, the system feels pressure. That pressure builds quietly. Then suddenly, we are also seeing something else happen at the same time. Trust in financial systems is slowly eroding. More investors are questioning counterparty risk. They want assets they can hold, not promises. Silver sits right at that intersection between industrial necessity and monetary history. And when global uncertainty rises, that combination becomes very attractive. Let me slow this down and make it very clear. A rising Shanghai silver premium does not mean silver goes up tomorrow. It means physical stress is building. It means demand is stronger than the headline price suggests. It means the floor under silver is firmer than many believe. And here is the key point for retention, so don't miss this. The biggest silver moves never start when everyone agrees. They start when signals like this appear quietly, while most people are still skeptical or bored. If this analysis is helping you see silver differently, drop a quick like right now. It tells the algorithm this content matters, and it helps more people find Wealth Wave without noise or hype. As we move forward, keep watching the relationship between paper prices and physical premiums. Especially watch Asia. That is where real demand shows itself first. When that gap widens, it is not a glitch. It is a warning. At the end of the day, silver is not just a metal. It is a message. And right now, Shanghai is speaking louder than the charts. As we wrap up, I want to hear from you. Do you think physical silver will force paper prices higher? Or do you think the disconnect can last longer than most expect? Drop your thoughts in the comments. Your perspective adds value, and I read every single one. And if you found this breakdown useful, share it with someone who watches silver prices, but may not be watching the right signals yet. That one share can start a powerful conversation. This is Wealth Wave, where we follow the real signals beneath the noise. Stay sharp, stay patient, and I'll see you in the next one.